Good afternoon. Here are the closing market comments for Friday, November 12th. Grain markets were hit extremely hard today. Corn and beans both limit down, while wheat seeing extremely large losses. The news today coming out of China for the most part, as China looks for additional means to control inflation. Talk of increasing banking reserve rates, increasing interest rates, cracking down on speculation. Overall, to try and control commodity and food prices, had a tremendous wave of liquidation which began in the Chinese markets overnight, and that spread across most of the world markets, including our Chicago Board of Trade today. December corn finished 30 cents lower, the limit at $5.34. July corn down 30 cents at $5.58 3/4. January soybeans down the limit 70 cents at $12.69. July soybeans down 70 cents at $12.77 3/4. Kansas City wheat down 38 cents at $7.30. And Minneapolis December wheat down 32 cents, finishing at $7.44 3/4. It wasn't just the grain markets, commodity markets in general seeing large losses today due to overall speculative liquidation and selling across the floor. Crude oil down $2.86 a barrel at this time at $84.95. The gold market down $36 an ounce at $1,367. The U.S. dollar down 11 points at 78.24, and the stock market losing 104 points at this time, with the Dow trading at 11,178. Livestock markets saw some losses, a little bit more moderate losses, but lower nonetheless, with December cattle finishing 65 cents lower at 98.40, while the December hogs were down 15 cents, finishing at 68.97. Let's take a look at our weekly price summary. For the week, December corn futures lost 53 cents, most of that coming today. In soybeans, the January bean futures lost 15 cents for the week. Again, we were up for the week until today's limit losses. And in the Kansas City December wheat futures for the week, following corn and losing 56 cents on the week. Some of the news highlights that we saw during the course of the week started out with the USDA releasing its November crop report. The report was considered somewhat neutral for wheat, a little bit friendly for corn, and very bullish for soybeans. The grain trade was expecting friendly numbers from the USDA, and we saw buy the rumors, sell the facts attitude unfold in especially corn and wheat as those prices drifted lower following the USDA crop report. Some of the biggest news of the week came in overnight, and it came in out of China, where their CPI for October came in at 4.4% above the year-ago level. And that compares to China's target inflation rate of 2.5 to 3% on an annualized basis. The Chinese government is again raising bank reserve requirements, and there's talk of another interest rate hike to try and cool down the economy and avoid runaway inflation. The talk of additional government actions in China to try and control inflation and commodity prices as well generated huge fund selling, which began in the Chinese markets overnight and then spread across almost all world markets during the course of the day today. I want to take a little bit closer look at China's demand base. China is a tremendously large consumer of world agricultural products and commodities, and anything that takes place in China that affects their markets has a very strong effect on world markets as well. China's population of 1.34 billion people is nearly 20% of the world's total population. China's economy and their standard of living are both growing rapidly, and this is creating a tremendous increase in the demand for feed and food products. China is now the world's largest consumer of rice, cotton, wheat, and soybeans, and the second largest world consumer only to the U.S. in corn consumption. China has made strong efforts in recent years to be self-sufficient in wheat, corn, and rice production, and typically has been just a very small player in exports and imports of these commodities. But China will import over 80% of its soybean needs this year. In recent years, it has become increasingly difficult for China to remain self-sufficient in a number of those grains due to huge increases in demand. And that's one of the reasons why this market has been talking very consistently about a very, very strong demand market over the last few months. Due to huge increases in demand as well as skyrocketing commodity prices, the Chinese government is making attempts to try and control prices. This year, China has sold off huge amounts of their strategic corn reserves. There are two major reasons for China to be selling corn from its strategic reserves. The first reason is that the demand from their feed industry is increasing faster than production, and the reserves are needed just to satisfy demand. The second reason for China to be selling off their strategic reserves in corn is that the Chinese government wants to keep food prices in control and prevent them from skyrocketing, and therefore is selling reserve stocks to try and control price increases. The Chinese government has also been increasing bank reserve requirements and raised interest rates on October 19th for the first time since 2007. Also talk of another interest rate increase coming up possibly over the weekend or early next week. And these are attempts to cool off inflation, including the price of grains and food. Despite these attempts to keep grain and commodity prices from surging higher, corn and cotton both hit all-time highs in the Chinese markets here this week. Other commodities and raw materials also hit all-time highs. Since the recent attempts by the Chinese government to control prices have been unsuccessful, it looks as though China is going to attempt additional measures to try to control prices, and that was one of the things that really set this market into somewhat of a liquidation phase today. Taking a look at the December corn chart, we've reconfigured this chart today with today's big move to the downside. We have now taken out the lows at 542 that were posted back in mid-October, and the market is in the process of trying to fill the gap that was left following the October crop report. Commodity prices are very high, corn included, after hitting $6 earlier this week. And with high prices also comes very, very large volatility and big price swings. Right now, it looks like the market has got some support coming in at the gap area at 528 and also down at the long-term uptrending line down around that 515 level. Despite some of the news coming out of China and some of the panic liquidation coming out of the funds, the long-term uptrend is still in place. The long-term moving averages are still pointed upwards, so we could see additional liquidation here over the next few days, but again, we have not broken the overall long-term demand market. Turning to our January soybean chart, we had mentioned here over the last couple of days that the soybean market is in a very strong uptrend, but we can't maintain a trend like that forever, and that we will have corrections from time to time. One of those corrections definitely taking place today as soybeans limit down. With the technical indicators also turning lower, wouldn't be surprised to see some further liquidation in soybeans early next week. We have initial support coming through at the uptrending line drawn off of the October trend. We have some minor support also at the area where there was a significant amount of consolidation back in that 1220 to 1230 type range back in the month of October, with major support in the gap area, which is at 1050 to 1060. That's also where the long-term uptrend is drawn, and so that would be our area of major support if we would see additional corrective activity next week. Turning to the Kansas City December wheat chart, very disappointing day on the charts today, closing sharply lower and breaking through all of our moving averages. Technical indicators also pointed lower now. It does appear that we have the potential for additional liquidation from both a chart perspective and a technical perspective. But again, as we've mentioned, it'll be largely dependent upon what happens in corn as we come in early next week. That'll wrap up this afternoon's broadcast. Thanks for joining us, and have a great weekend.